The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And it is a beautiful Friday, April 20th. It is National DNA Day, and the day commemorates the completion of the Human Genome Project. It wasn't so much a completion as a race to the end. And finally, everybody just kind of got together and shook hands and said, we'll call it a draw. Everybody had kind of a piece of it. Actually, one of the gentlemen instrumental in it was somebody I know, a game programmer. They took, the people he was working with, took a path of basically breaking up an entire genome sequence and trying to plug it back together later. Some people tried to do the whole thing in one bite. A lot of people got lots of parts of the puzzle, and finally they just said, hey, it's not worth it. We're not going to be able to copyright someone's genes or trademark them, so let's just go ahead and say that we're done. And, of course, it's always interesting to know about DNA. In fact, most scientists call DNA the biggest discovery of all time. It is basically four little compounds, adenine, cytosine, guanine, and thiamine. The two basically plug together, so you have kind of a 1 or a 0, depending on which one of those two base pairs are put together. If I took these, if I could move them, you'd see that they plug together rather well, and they put everything together. In fact, one of the things I saw in the news today was a way of ordering a boy or a girl, preconception gender determinations for family balancing purposes. Actually, ads running in Toronto for a Seattle-based outfit. So kind of interesting already that we're getting to time and technology where, I don't know, it's a little Frankensteinish, if you ask me. I'm covering some companies that are in this sector, and the biggest thing is going to be DNA sequencing is going to come down a couple of orders of magnitude in price over the next year, 18 months. When that does hit kind of a sweet spot, I think we're going to see companies as large as Microsoft, Amazon, Google come out of the basis of that when it becomes every day. Unfortunately, we're already seeing some kind of the creepier parts of DNA technology come out here, like ordering a boy or a girl. I don't know. Just kind of makes me just a little bit weird, but it's going to be kind of a big deal out there. We've got a market that's kind of bouncing around on earnings. Let me see if I can pop something up right now. Up 2 on the S&P. We were up as high as 8 or 9. I actually covered or sold all my positions in the newsletter yesterday, starting early around, I think it was around noon or so, and started selling positions. I don't think there's much to actually be going on between now and Wednesday. We've got the French election over the weekend. They're going to, apparently, if you read the newspapers and believe them, the French people are going to go the full commie. They're going to go back to retiring at 60 and 58, back to 30-hour work weeks, and I think they're going to slowly slide into the sea of not actually being worth anything. I can imagine that the percentages we see on the Spain bonds right now are probably just a speck of what France will see if they continue to go back down that road of spending and printing money to no end. They've already been down that road hugely, and sadly, we know the end of that road ends in a a country like Greece where everybody riots over nothing because there's no money and no one has anything left. Next week also we've got earnings. Monday, Texas Instruments and Netflix. Tuesday, Apple, 3M, AT&T. Wednesday, Boeing, Cat, and Sprint, and also an FOMC meeting announcement late that afternoon. Thursday, we've got Exxon, Amazon, and Coinstar. Friday, Chevron, Merck, and P&G. So we've got a lot of the heavy hitters. Got about 22% of the S&P already reporting as of today. That number will be up around 50% by next Friday. And most of the big or most heavily weighted of those stocks are going to be in next week. So probably have a very good idea of how this market's going to flush out. But I suspect between now and Wednesday, probably not a lot of action happening. I think we're going to see a lot of light volume days. In fact, didn't check what today's volume was, but I will right now. Actually, not so bad. 2.9 billion shares. Looks like we're going to have about a 3.6 billion share day by the end of the day. Could be a little less depending on how volume comes in. But we've got a lot of stuff going on out here. FOMC meeting, France deciding if they want to do the full commie and or socialism. And I guess the only difference between socialism and communism is socialists think that they're doing good. Communists know that they're evil. I guess maybe they don't know they're evil, but they are. And socialists are kind of the road to hell is paved with good intentions, I guess, is the way I would look at it. Also, in technology, over this weekend, we've got a kind of an interesting Earth Day. One of the things is going to be Philips is going to finally release its LED light bulb. The light bulb is $60. I think this weekend you can get a $10 off coupon from Home Depot. But when you're buying regular bulbs for about $1, seems awfully expensive. The claims on the packaging are probably a little bit ridiculous. Well, my producer said, "Why does it say 50?" And I said, "Well, I've already explained that. There's a $10 off coupon this week at Home Depot if you want to buy these things." But anyway, that doesn't include the amount of light over time they'll give out. I think they're going to be interesting. And in very certain applications where you don't want to have to come back and put in a new light bulb, even if you figure out the light that they put out and the electricity they use, currently they're going to be at least 3 times more expensive than the standard incandescent bulb that they replace. So it's going to be very tough to see how these things actually make it over time, other than the fact that we've been told we can't use incandescent bulbs anymore because politicians, of course, know much more than us and the market. If you are looking for someone that, if this actually does turn out to be something good, Panel is the one that gets the royalties off these, not Cree. Cree's kind of the other company in this sector. Wasn't very positive on them earlier this week. I think somebody called in. I said, it was about 50-50. I thought there were better plays out there. They didn't do too well after earnings. But Panel, a little different in that they've got some actual not trademarks, but copyrights and patents that they're already gaining money back from. And the first of these is this Philips bulb out here. One of the things about, the worst things about being forced to go to these bulbs is that the hotter they get, the less well they perform. So that these bulbs actually made fairly small at this time. And they don't have anything that would replace a 100-watt light bulb, because if it gets that hot, they actually fail so quick that people won't want them, and no one's willing to pay $100 either for a 100-watt light bulb, no matter if they last 20,000 hours or not. Anyway, that's going to be the big thing. Probably going to see as the end of 2014. I think maybe it's the beginning of 2014. Anything more than a 40-watt light bulb is going to be banned in the United States for our own good, of course. I would have much rather tried to see this thing come along and make its place in the market than being forced on people, because it's never going to be, actually cheap. We've seen that in the solar stocks these years. Anything above about 25 degrees Celsius, which is what? I think it's about 82 degrees, 80 degrees, something like that. Light actually starts falling off on LEDs. And actually, they've used these in like turn signals that are painted black. They found out that they had to start putting fans in them and some other things to keep them from failing fairly quickly. White LEDs often use more than one phosphor. These phosphors tend to degrade, especially in heat, with age 2, losing their efficiency and causing color changes and the amount of light put out. There's a great chart here, if you're watching Tiger TV, about how much light is put out over time. Relative light output for the phosphors for LED on time hours. You get about 28% over the lifetime. Normally within the first year or so, you're going to find that you're only going to get about 82% of the light using the phosphors. When you put that together with the drop-off in LED lighting, after about 2 years, your regular 40-watt bulb is going to be giving you about 20 watts. So not a really good story out here. The only other thing is some people, there's probably some good business in OLEDs. Those are organic type LEDs, more used like in cell phones. A better part of the business, in my opinion, because people are more than willing to pay the price for OLEDs for displays. Much tougher to get that kind of same bang for the buck in LED lighting. One of the reasons I would have wished is that we could have seen LEDs come along and a market-oriented solution out here is probably the poster child for all these energy companies, and that's Solyndra. They amazingly went broke. Stephen Chu, who is the head of the Secretary of Energy, is now $110 billion and zero. Looks like from reports coming out from the Congressional Budget Office, every dollar that we spent throwing money at alternative energy looks like those companies, in fact, every single one of them, looks like an entire bust out here. So I would say as an investment, Stephen Chu has probably got a perfect record of failure. And I could think of a lot of other people that might be put in there could do a much better job of being an energy secretary. The problem is that you can't just force people into a market. I think the whole solar energy part of this market has really taught us that. I'll come back and talk about what John Kenneth Galbraith comes back. Then we've got a lot of other stuff to talk about here today. A lot of stocks moving, some other things to think about. We'll be back in just a second.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's just wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
As we come back, just one of the principles that, sometimes you run across stuff and it just floors you. You know that there's so much truth in 1 or 2 paragraphs that it just floors you. And John Kenneth Galbraith wrote a book called A Short History of Financial Euphoria. I think it really goes into what we're seeing in especially the solar area of the marketplace that is pretty much imploded. I would imagine that all of these companies are going to go bankrupt. At least they're going to file for bankruptcy protection. But all speculative bubbles were started with a belief that somehow the laws of physics didn't apply this time to financial markets. It's always started with some new business model that somehow will make wealth in the face of all logic or sense. And that's just any time you actually see any of these things where you get a lot of government intervention in it. Normally, if it's a pretty good thing, you don't need the government to get involved in it. It will find its own backers. People will see the money in it, and they'll get started in it. The idea was somehow is if you could push this a little bit, it would happen. And basically what we did was spend $110 billion and lots of investor dollars beyond that, building a wonderful solar industry for China. Didn't really do much, and that's it. You've got to be able to make the thing work. And I wouldn't have really minded at all if we would have spent $110 billion on pure research, but actually trying to make a market out of it has rarely, if ever, worked when the governments push something, and especially when it's not cost useful. Another thing I saw was very interesting. I haven't had a lot of time to watch television. I just happened to turn it on Wednesday night before I went to bed and got sucked into PBS Frontline story just because it worked so well and tied in so well to trading and understanding what is knowledge and what is not. Statistical and applied probabilistic knowledge is the core of knowledge. Statistics is what tells you if something is true, false, or merely anecdotal. It is the logic of science. The guy that wrote the Black Swan, Nassim Taleb, put that in his first book. And really, if we think something works in the marketplace or some kind of indicator, you should be able to actually test it and prove that it works. More importantly, you should be able to test it, and you should be able to falsify it. That is, come up with some way of knowing when it doesn't work and why it doesn't work. This study was basically talking about how the beginning of first 30 minutes was a case about a gentleman that was arrested because he had fingerprints that matched ones on a bomb in Spain. And I think it was around 2004. And basically, the FBI for almost 80 years, 70 years, has been telling people that there's never been two people with the same fingerprint or shared the same fingerprint. Well, the interesting thing is they never did a study and they never tested it. They've just been spouting that for the last 70 or 80 years. They basically came up with this gentleman who had 15 points in common, according to FBI fingerprint experts. So they've had to go back now and find out. But that's exactly what we're talking about in being able to be falsifiable. Just because you went through 5,000 fingerprints and those 5,000 didn't match doesn't mean that there isn't going to be a match eventually. This guy's name was Brandon Mayfield. He was an Oregon lawyer. And he happened to be a Muslim, although he didn't look like any Muslim that I ever seen. He had kind of red hair and everything. But they came to his place of business, arrested him, threw him in jail for a couple of months, only to find out about 3 months later that they arrested the actual gentleman that was had the matching detonators that a fingerprint actually came off of. So it was very interesting to find out people actually do have, at least according to fingerprint analysis, which is so close to looking at charts. We're back trying to find patterns and match those patterns. The problem is that they went and had an initial fallacy, and that was that no one has the same fingerprints. The Black Swan theory, and part of the reason that Taleb named his book that the Black Swan, was it comes from an old world presumption that all swans must be white, because historical records in Europe reported that they'd never seen a black swan in the 1800s. They went to the Galapagos Islands, Darwin did, and found a black swan. All you need is one black swan to prove something wrong. That's falsifiableism. Be back in a minute.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
As we come back, I was kind of trying to finish up that whole black swan theory because I think it's extremely important when we're trying to make judgments in the marketplace. And basically, the whole thing is all you need is one thing to prove a statement is false. In this case, all swans are white. They went to the Galapagos Island, found a black swan. That's it. You can't say that all swans are white anymore. Same way you can't say no one has the same fingerprint anymore. Anyway, okay. What they were doing through is, I think it was called the Real CSI and something else, a special Wednesday night on Frontline. But the examiners were asked to re-examine prints from their own cases. Only one of the experts stuck by the previous judgments. 3 reversed their previous decisions. 1 deemed them inconclusive. When you tell analysts different things before going in, they come up in fingerprint analysis, come up with different judgments. Clouding your judgment is just the same in the market as it is in fingerprint identification. But they've done several studies already, and they found out that if you ask somebody for a fingerprint analysis and let them know that it has to do with a breaking and entering case that basically no one got hurt, or if it's a murder case, you're 4 times more likely in the murder case to have, with the exact same fingerprints, someone come along and come up with a match. So the one thing you can't tell somebody that is in a fingerprint business is where this case is coming from. Ideally, they wouldn't have any clues as to what was going on, only if they could match them themselves. I know on CSI, they show you a computer matching them perfectly, and that's probably why being a good market technical analysis person is no different than anything else. You really can't, you can get close with computers, which is what they do. But at the end, all those patterns are far too complicated for computers to actually go through, especially once people start putting lots of different indicators on a stock chart. It's not that much different than fingerprint analysis. Basically, they'll get a lot of them with similar features, and the fingerprint analysis guy has to go through them and figure out which one is the closest to matching. Normally, depending on who you talk to, anywhere from 8 cases where they find identical little areas in a fingerprint to 16 are accepted. There's no national standard for it, which I thought kind of was horrible. Yeah, 6 point... and there was never a statistical test of how many false positives there ever was. So while the FBI has been saying forever that they've had statistical tests, the answer is that there isn't any. The message in this, and I'm kind of talking about this today because I didn't figure the market was going to do a whole lot, being up +3 here, and actually Dow probably not too bad. NASDAQ off almost 4. I figured this was going to be a flat day with expiration. Pretty good day if you're not trading to actually think about how you are. But my message is always this: are you sure enough to be unsure? And in Mark Douglas's book, Trading in the Zone, he has a passage that I read probably every month, and that is, objectivity is a state of mind where you have a conscious access to everything you know about the nature of the market and its movement. In other words, nothing is being blocked or altered by your pain avoidance mechanisms. That's the same thing. When I look at my charts in the morning, the first thing I do is go through them, and I don't really pay any attention to what the symbol is on them. I get the ones that look like they're making the best signals. Then I go back through them and maybe look at the sector they're in. But I want to find stocks without being predisposed to knowing whether or not it's just a simple B&E or if it's a murder case, and we're talking about something where multiple people have died. Those kind of things cloud your issues. So just kind of an idea out there that what we can learn from things like even PBS's Frontline is that people are incredibly biased. If you are watching Tiger TV right now, I would recommend it. There are 2 things that are really important to look at, and this is just kind of a test for you here today. I've got ABC. And then the next one, I've got 12, 13, and 14. And then I've got 12, 13, and 14 in ABC. So is that B a 13, or is that B a B? I guess I called it a B, so it's got to be a B. Our biases come in very quickly, and a lot of times it's the first one we show. If I show the first slide we had, and I'll go back to it, the ABC, most people select ABC even after they see that it can be also a 13. If you show the 13 first, most people, about 70% of people, will call it a 13. So there's multiple biases, but they're called cognitive biases. And there's a great book, if people have never gone through it. On Amazon, he is one of the most hated people in technical analysis because he actually went back and tested all these supposedly good signal generating tools. Almost all of them I knew from the get-go probably wouldn't be worth a lot because they are moving averages. Moving averages, almost by their definition, will always be 90 degrees out of phase with the underlying signal. And you can get into that book. He explains it fairly strongly. Everybody hates him because he actually tested everything everybody thought that worked. This is one of the reasons that pushed me even more farther into price and volume trading and looking at swings where there was an easy way to test whether or not they worked or not, and an easy way to know whether or not you got a signal or not. We were talking a little bit yesterday. I was actually listening to Kate Salter's show, and she was talking about something. I brought it up a few times, but there is a Latin, and I'm not going to even start it because I didn't take Latin, but it's called post hoc normally. And if you look it up, it's basically since this event followed this one, that that event must have been caused by this one. It's normally called correlation is not causation. Just because someone jumped up and down when I said a word doesn't mean the word caused them to jump up and down. If I say the word 100 times and he jumps up and down every single time, maybe there's some kind of correlation. A single time, a single action does not mean causation. And that was, something else they kind of brought up in that part of the market. We're going to get to some stocks here fairly quick. You can give me a call at 877-977, 877-977. I'll think about it here and again. I've actually drawn a short blank, middle blank, 877-927-6648. And we can discuss your stock before the end of the weekend here. It is, there's not a whole lot going on, but we will go through some. I wanted to go through a couple Gartleys I'd picked up in the marketplace so far. Let me see if we can pick this up here, so everybody can see it. One is the Semi Group. Not real familiar with this particular company. I'll zoom in here a little bit farther so we can actually get a good view of it on Tiger TV. This one looks like it was setting up almost beautifully and perfectly today. The symbol is SEMG. And if you want to see a Gartley pattern that's pretty much set up very well, at least for the XABC points. You might take a look at this one, especially since I think it's next Wednesday. Tom's going to be doing a Gartley seminar and webinar after about 6:30 on Wednesday. I think it's next week. I'll have to check on it during the break, but I'm pretty sure it is. But here are a few to start looking at, going through his book while we're waiting for it. Semi Group, when you really look at it, there's a nice X point. And the X point it's kind of like an ABCD, but you add one more, and that's the beginning of these patterns, called the X point. The November 11th high at $29.57 starts your X point. Your A point is December 16th. What is that? $24.49 on December 16th. You go up and hit the B point on January 5th. $28.64. Come back to your C point, $26.09 on February 22nd, on 2nd, excuse me. And we finally get to the end of a bearish butterfly today. The ABCD ratio is a little long. Normally you want to see these things 1-to-1. A lot of times you're going to get in a good ABC one that kind of sets up to a 1-to-1, and then you end up with the extension all the way up to a 1.27 retracement, almost a 1.28 retracement. The target on this one was $30.95. We got up to $31.50 and saw it roll over. Going to close probably below that target point at $30.95. So kind of a good one to watch out there if you're looking and finding out more about Gartley's. Another one is Tyson Foods. This one quite hasn't made it to its target point, but awful close. TSN is the symbol on Tyson Foods. And that is, you've got the X point starting out here October 4th. $16.38. And the 8 point starts on December 29th, $21.06. You come back and make your B point on January 30th. That's $18.45. And then we have the C point March 14th, $19.99. So we're coming back here on Tyson Foods. And we got down to, $17.83. A standard target on this Gartley would be $17.38. So we're almost actually there. But will be interesting to see how close we get down to those. But going to be very interesting here. Did I do the first one? Not so much. Well, we'll look at some other ones here. I want to go to some regular stocks. I got a handful of those that are interesting out here today. Let's see what ACE was one. I want to see how this actually played out here today. If I can get it to come up. Here we go. ACE Limited looks like it has the possibility of making a breakout, but volume is a little light. ACE is the symbol ACE. You had a nice October 27th high out here, $73.76, 4.5 million shares. It's been kind of playing around, 2-3 weeks right under that breakout area. You had a huge candle, and actually, in comparison, fairly decent volume. Unfortunately, you had about 3.1 million shares yesterday. 2.5 million probably today against that 4.5. So normally you want to see when these things do break out above the previous high, you normally have 2-3 days to get some volume in. If not, this is a really nice distribution pattern up here at these highs. Keep an eye on ACE. AMAT was another one that's kind of interesting here. We've been seeing this thing kind of base out. And been watching it for a while, but it's got to, let's see, a little shorter time frame here. It's gotten to a couple of lows with lighter volume. We're seeing fairly light volume over the last 4 or 5 days also. That light volume started March 5th. You had $11.92, 18 million shares. We came into that with 13 million shares and went below it. We've closed back above it. But very little movement out here. Normally, I give this thing about 3 days when you come into a lower low like that, close back above it to get this thing moving. So if you don't see Monday or Tuesday AMAT starting to move back up, you might actually break and move down lower. But normally, a pretty good bullish sign in the marketplace. Another one that was kind of interesting, looked a little bit toppy, is Avery Dennison. A symbol is AVY. This thing's kind of looking at it here, looked like it had gotten awful toppy. You had the big volume high on January 6th. What is that, $30.31, 1.5 million shares. Went above it, closed back below it on February 29th on 740,000 shares. So a pretty good signal that you'd reached the top of 50% of the volume of the previous high. Got in a little bit more volume here in the last few days, almost 1 million shares, but still, at least 500,000 shares off this thing, making a little doji here today. So another good one to start watching out here in the marketplace. Other things, this is one that was very interesting. Connections Corporation of America. We've been watching these stocks kind of try to make previous highs, and this is one that I'm watching very closely. Symbol is CXW. This is, of course, the for-profit jail company. The last big high they had here was April 5th. And it was, $30.62, 11 million shares. Trying to go above it here today on 3.5 million shares. Got to watch this one real close. CXW. We'll be back in just a few minutes. Give me a call, 877-927-6648.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, folks. Turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more. And that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion. And for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best-kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk, and you get all the benefit. Go to the homepage at TFNN.com and sign up today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we come back, we're going to look at a few more stocks here before the end of the day. Let me catch up here on some volume and some other things. Just 1 second while I do some house cleaning. Apple's off 14.5, 572.79, and wanted to get to volume here. So let me check that out real quick. It's always interesting to come back. See if we have, that's not right. We'll get it here in just a second. While we're looking at, let's see, finance here, waiting for it to come up. The corrections company, kind of finished with that. 11 million shares to 3.5 million. Looking like it's kind of a toppy out here. These are certainly a lot of the stocks you want to have if you can get these things to turn. Expedia had a nice little move, and some of the other ones this week. But not a whole lot. Expedia, kind of an interesting one, actually giving a signal here today. EXPE is a symbol on that one. You had a nice high volume low on March 9th, and that actually came in with 6.2 million shares, $31.43. Came into that with on April 16th. $30.97 is low. It's now closed back above that low and back into that. Volume never really got any better on this. So Expedia looks like it's got a nice little trading range out here. Going to be $4 or $5 in it. Probably going to go back up one more time and at least test the gap at 34.50 up to 35.50, something like that. If the market doesn't turn on us like a rabid dog, which I'm kind of looking for a huge movement in this market, probably by Wednesday, out of all the different things going on. But it's going to be very interesting. Let me see what we have for volume. We're going to come in with about 3.6 billion shares, which is actually fairly decent for most expiration days. I think the last one we had was about 4.2 on triple or quad witching. It's going to be, that's actually not too bad. So we're going to have to maybe pay a little bit more attention. Options rollover Monday and Tuesday, FOMC on Wednesday. We've got French elections over the weekend. We've got Argentina nationalizing energy companies. There's a lot going on in the news to actually move a lot of these companies around. We'll probably have a little bit of time here left. We're going to look at one last stock. Let me see what we have for time here. Yeah, we've got time for one. See Tom O'Brien getting ready, and maybe he can nod up and down. Wednesday night is going to be your Gartley webinar, correct? I think so, right? Yeah, okay, he says so. So anyway, we have March 26th on Kulik and Safa. Normally, Click and Clack go together. Those are the two companies that do pretty much the same thing in the semiconductor industry. This one was giving a pretty good signal that it had pretty much topped out. That March 26 high, $12.78, 950,000 shares, went just a little bit above it, about a dime above it on the 19th yesterday. 570,000 shares. Now it's popped right back into this trading range. If you look at Click, you got to look at Clack. Go back and see if you get the same thing. And guess what? Pretty much, companies fairly close trading patterns, almost always matching out there. I will be in the second hour of the Tom O'Brien Show for our Tech Insider, as we normally are each week. So make sure to tune in. In fact, for Tom's show, it starts in about 10 minutes, and some others. But pretty good signals out here on Click and Clack. Keep an eye on those. And we'll be looking forward to seeing you in about an hour and 20 minutes for the Tech Insider. See you all then. Have a great weekend if not.